So you know what guys, I really don't want to give up making 3 videos a day, so I decided it is definitely time to switch it up a bit and take some time out to look at a completely different stock. Tonight we are looking at Jumia Technologies, I think that is how you pronounce it. Stock symbol anyway is J. Maya stock. Obviously you can see that on your screen right now. If you have a quick look though, the reason why I decided to make a video on this stock tonight is simply due to the growth of the company, especially over the past week. If we look at this, we can pretty much draw a ruler through this and see it as just a steep gradient on the way upwards. We started off the week on even $15. We ended up the week on $30. So we've obviously increased about 100% there. That's a 98.57% increase if we're looking at that from an actual percentage point, but that is not bad at all. That's absolutely amazing for a 1 week period actually. Looking out to 1 month though, we are looking at a huge growth though still even. We saw lows of $12 this month, obviously from the previous point in the month towards the start, looking from the 23rd of October, we saw the stock being quite stable actually, going down a little bit, going up a little bit, seeing highs of 1934, and then just rocketing from that low all the way up to 3048. So obviously that has brought the attention of a lot of investors, and I'm obviously interested in this one as well, and that is why I decided to make this video on it. So tonight we are looking at all you need to know about the stock. We're going to be looking at the earnings, we're going to be looking at the information for the future, what the company does, the market sector which a company operates in, everything like that, everything that you need to know. So if that does sound like a good idea, please do subscribe to the channel. We're trying to get to 1,000. You can see we're on about 749. Can we get to 800 by the end of the week? I definitely think that we can. So if you guys could just help us get there, it would be appreciated so much. Of course, feel free to come and join us on our Discord. Link to the Discord is in the description. Of course, it's all about stocks, so yeah, come and join us over there. I'd love to see you over there, so feel free to come and join us at any point. Link will be in the description. So we're going to move on then. We're going to have a quick look now at the finances of the company. So we can see the market cap is apparently 2.47 billion. And if we have a quick look down to the earnings ratio, we can see that we had an EPS beaten by 12%. So the surprise was 12.44%. The expected was going to be minus 41, minus 0.41 that is, and the reported was minus 0.36. So slightly better than what was predicted, and that left us with a positive result. Unfortunately though, the revenue figure was negative at minus 14%, so we were expecting 39.18 million. We actually saw 33.67 million, so of course that left us in the red ever so slightly. So that's about 14% down in the red for that period. If we look at some other financial information for the company, we can see revenue figures for the year and whatnot. Now I would presume that this has been written in shorthand, so please do understand that one. We're looking at revenue for this year, which is already almost as good as 2019. So revenue figures have been rising very slowly and rapidly. That was contradictory, I'm sorry about that. They have been rising very steadily, I meant to say, since about 2017, where we saw the price of 93,054 made. Of course, as shorthand. We saw it in the next year 130,569, the year after that 160,000, and so far this year 150,000 almost. So short, first things first, if we just look at this figure, we can see that we only need to go about 10,000 more to beat the previous target of the last year, which was the highs for the revenue figures over the last 3 or 4 years. So like I said, we're probably going to be looking at a finance beating period for this year, which is better than what has been recorded previously, which is a good thing to see. So another key thing to note, which is also good this year, the cost of said revenue was actually lower than what it was in the previous years, in fact in all of the previous years. So to put this into context, what it means is that the company has made more money but spent less money making that money. I said money a lot of times in that sentence, but if you understand how that works, you will know that it's a good thing to see, so I'm happy to see that one. So from the profits which we have seen in the previous years, because of this cost of revenue figure being lower, we are already looking at a greater profit than what we saw in 2019 and 2018 even. So what this means is that even though the year is not over, because they managed to reduce the cost of said revenue so much, the profit figure was actually larger. So we've got 1 month to go to see if this is going to be even larger towards the end of the whole year when we get a full complete picture, but from the period now it is looking very good. So of course that figure is already beaten for the year, good thing to see. So of course operating income is what we're going to look at next, and that is actually still minus. However, that looks to be rising from the previous year of 2019, which is a good thing. We want to get that positive as soon as possible, maybe 2 or 3 years that will be positive in, which is a good thing to see. And I don't really think there's anything too key other than that to have a look at. What we will have a look at though is the figures around the company and basically what the company does itself, because there's no point understanding the stock if you don't understand the company. So basically, Jumia Technologies is a logistics service which operates through e-commerce platform segment, which means that it's in the e-commerce business range. A good one to watch after this would be our Shopify video that we made yesterday, because we talked all about what e-commerce is and why e-commerce is definitely going to be a growing market in the future. But yeah, for that reason, I think this could potentially have great, or potential for the future. If we could just see this continue, this growth continue in the e-commerce sector, which we definitely will for the reasons which I highlighted in that video, and I'm just going to highlight a few of them right now. It's easy for customers to shop. It means that shops can reduce overheads without having physical buildings, rather than having warehouses. So warehouses are cheaper to maintain than stores because you have less staff. The cost of a high street building is generally speaking more expensive than that of a warehouse, which can be located in the suburbs or the countryside and whatnot. So yeah, this is generally speaking a profitable business model, more so than a traditional store. And for that reason, this company could have potential. But let's have a quick look at what our analysts say down here when we go to our forecast page. So we'll just give it a second to load, and we can see here the 5 analysts which are offering a 12-month forecast for Jumia Technologies AG have a median target of 1184, a high of 1573, and a low of 677. The median represents a 61.42% decrease from the last price of $30.70. So let's understand this one. If we have a quick look on the graph, basically all of the analysts, now bear in mind there's only 5 of them, but they are all saying that the stock is way overvalued right now, and at the minimum we are seeing a 50% decrease in value. Now don't get me wrong, analysts have been incorrect in the past, but this is just what they are saying for the current period. Interestingly though, they are generally still positive on the stock, saying that the 8 analysts which have been polled in the investment sector, so basically these are ones saying whether you should buy or sell right now, they have an average rating of hold. So I'm going to be explaining that in a minute. This rating has held steady since November, when it was unchanged from a hold rating. So yeah, let's have a quick look at what this means. If we have a quick look down here, we can see 2 of the analysts are saying that you should just directly go out and buy it. It's going to be a good stock to hold into the next year or so. We have another 5 which are saying that if you don't already own it, you should not buy it, but if you do already own it, you should not necessarily sell it either. You should just hold it steady for the next few years or so, and it's going to be a decent performing stock. So that's interesting, being as the other analysts were saying that it is not going to be, well performing in the next year, but these ones are still positive on it. So we do have one which is saying to sell the stock directly, whether you have it or not. If you have it, sell it. If you don't have it, don't buy it. But the majority is still positive, with 7 out of 8 analysts being on the upper side, the green side, or at least the neutral black side, which is a good thing to see. So we can see what our analysts have said. We have seen about 356.17% growth for the 1 year period. So feel free to come and tell us what you think will happen in the next year. Come and do that on Discord. Feel free to do it in the comments. And I hope you did enjoy the video. If you did, please do leave a like and subscribe. I will see you in the next one. Thank you for your time. See you then.